But today we just saw a tempered listing for Afcons Infra. It was debuted at an 8% discount. But let's understand the business. Will the margin roadmap sustain? What is the outlook when it comes to the business and key factors and drivers for growth? Subramanian Krishnamurthy is the Executive Vice Chairman, and we've also got with us Mr. Srinivasan, the Managing Director, joining in. Thank you so much for taking time out. To begin with, Mr. Subramanian Krishnamurthy, what is the kind of revenue growth that you're targeting for FY25 and over the next 2 years? And more importantly, what is going to drive that growth?
We have been achieving a revenue growth rate of 18% in the last 18-20 years, and that is what we hope to maintain going forward. FY25 would be more or less equal around what we have achieved in the past.
Right. You know, there's been a consistent margin expansion in the last 3 years. Do you expect this to continue, and what kind of margins do you hope to achieve by FY25 or 26?
We have achieved a EBITDA of 11.6%, which is the highest in the industry. Our attempt is to maintain that and even attempt improvements.
And currently, a major chunk of your order book comes from the underground and elevated metro segment. Do you think that will continue, or will the product mix change going forward?
No, currently we have, as you rightly said, our urban infrastructure segment constitutes about 48% of our order book. Next comes our hydro underground water segments, which is at 28%. In the near future, we don't expect significant change in these percentages. And while marine business could pick up thanks to some of the new jobs coming on offer in India and overseas places. Therefore, we would look at a similar kind of a pattern in the short run. Over a longer time, it could change depending on the market availability. But as an organization, we are geared to switch between the segments easily.
Right. So what's the outlook specifically for the marine segment?
Hitherto, last few years, marine segment has been substantially international with lesser participation in the domestic area. But now we find there are EPC jobs coming in Vadwan Port, in Andaman Port, all these kind of places. And there is also heightened investment planned by Navy. With this kind of things, we do hope that there will be a good domestic growth as well for the marine segment.
Right. And just wanted to understand from you as well, Mr. Srinivasan, are you planning to increase the contribution of the overseas business? It's currently at 25%.
Exports we would like to have on a continued basis about 30%. And 70-30 between domestic and exports would be our desired ratio. Temporarily, it could have a blip or it could go up, whatever. But on a sustainable level, we believe 70-30 could be a good ratio.
Right. Param, so which geographies are showing better demand currently, and which new countries are you planning to foray into?
We do believe that Africa continues to offer good opportunities, and neighboring countries and Saudi in particular in Middle East, and some of the erstwhile East European countries are offering good scope in our assessment. And there are other opportunities available in far-off places like Latin America, USA per se, all those kind of things. Those markets we are yet to fully explore.
And Mr. Subramanian, in the past, you have selectively pursued very large value and complex specialized projects. What is the reason behind this strategy, and what are the benefits of this?
The reason is very simple. A large value complex projects, the competition is very less. So the chances of the company succeeding and our ability to execute these projects are well tested and established. So that has been the reason why we are focused on large value complex projects.
Right. Param, so what is the outlook in terms of order inflows in your order book for FY25 and 26, and when is it, or rather where are you expecting major orders to largely come in from?
Currently it is slightly skewed towards domestic markets. For the current year, we have already booked about 11,500 crores of orders, plus about 9,000 crores of orders where we are declared already L1. So with that, our overall situation looks good. Going forward, we will continue to have both domestic and international orders in the ratio in which we talked about. As current year, first 7 months of the order booking, that's slightly skewed towards domestic. Our international order is about 24% now and 76% domestic order. We would like to sustain 30-70 ratio between exports and domestic. And as a stated policy, we have stated that our order booking ratio should be between 2.5x to 3.5x book to bill ratio. That is what we will continue to strive upon. Instead of being very specific on what number we will target, all that, this would give a good indicator.
Okay, and Mr. Srinivasan, what is the outlook in terms of your order inflow, your order book for FY25 and 26? Are you expecting some major orders, and where are they likely to come from?
The government continues to focus on the infrastructure development, and that is one of the prime areas of target, especially taking Vikshit Bharat 2047 into consideration and government sustained efforts on Gati Shakti. There's a lot of focused efforts by the government towards last mile connectivity, towards getting infrastructure to play a major role in terms of GDP growth, all that. And under Prime Minister's initiative, a lot of good things are happening. And we look forward to a lot of things. Now, some of the areas where there could be an increased activity level could be hydro segment, which last 10 years not much has happened. Similarly, in river linking project, if agriculture to remain as one of the focus segments, then river linking will play a significant role. Irrigation projects could play a significant role. Rural connectivity could play a significant role. And of course, strengthening of borders had always been a focus area of the government. And so, border related connectivity could also be a focus area. So, these are areas which could go further. And also, there is accelerated effort to have railway connectivity all around in multiple forms. So, therefore, there will be a probably subtle shift from that of roadways to that of railways to a significant extent.
Right. Also, what are the overall demand trends, Param, that you're seeing in the country right now? Right. But, good to get in that exposure from you and understanding your business all through and through, both domestically as well as globally. Good to get color on that. But both of you, thank you so much for taking the time out and joining in today.
If you like this video, then like, share and subscribe to ET Now.